Hey everybody, so today we're going to do a weekly overview video, and there is a lot to talk about this week. So we got a lot of economic data as well as a lot of earnings, and this is probably the biggest earnings week. So just starting with the economic calendar, Monday, we don't have a whole lot going on. It kind of starts on Tuesday. So here we have consumer confidence, we have new home sales. And on Wednesday, this is the big day. We have core durable goods orders. We have pending home sales, crude oil inventories. We get that every week. And this is the biggest one, the FOMC meeting. So the FOMC meeting is a 2-day meeting. It starts on Tuesday, but Wednesday is the big day because that's when they make that interest rate decision. So that is going to happen at 2 p.m. Eastern Standard Time. And essentially, what they're forecasting is a 75 basis point rate hike. So you guys can see right here that is going from 1.75 to 2.5. Now we could go and we could look at the Fed Watch. So if we're looking at the Fed Watch right here, we could see that there is a 78.7% chance that we are going to get that 75 basis point rate hike and a 21.3% chance that it is going to be a 1% rate hike. So now going right back onto the calendar. On Thursday, we get initial jobless claims and GDP. Now, this time around, this is going to be a pretty important print. So let's go ahead, let's click into this. So if we're looking at GDP, we are going to get the preliminary for Q2 here. So as you guys can see, Q1 is finished out, and now we're going to get that Q2 preliminary print. So that is essentially going to tell us if we're in a technical recession or not. So right now the forecast is 0.4%, but the forecast has a tendency to be pretty inaccurate. So there are quite a bit of variances in that forecast number. So do watch out. So for example, let's just look at these first preliminary prints right here. If we forecasted 1.1, we got negative 1.4. So you guys can see these forecasts definitely have quite a bit of error to them. So let's just take a look at another one. We were forecasting 5.5. We got 6.9. And one more just for the heck of it. We were forecasting 2.7. We got 2. So now we're forecasting zero point 0.4 and to the positive. So as you guys can see, these fluctuations are pretty big. So it's material enough so that if we were to actually go negative, then we'll see that technical recession happen. And let's say we do come in negative and we do have that technical recession. Well, then that's going to look really bad for a lot of those retail earnings that are going to come in early August. So definitely something to look out for, you guys. And let's just see if there's anything else on the economic calendar that we should keep an eye on. There it is, core PCE. So that's also going to be pretty important. The Fed does look at this quite a bit. So now let's go ahead. Let's look at the earnings calendar. So if we're looking at the earnings calendar right here, let's see. Here are the big ones. We're looking at Alphabet on Tuesday, Microsoft on Tuesday, Visa on Tuesday. Now, we do also have Enphase, McDonald's, Chipotle, UPS, Coca-Cola. Those are pretty big names too. For Wednesday, we have Meta. That's the big one. We also have Shopify, Spotify, and Etsy. But Qualcomm. Meta and Qualcomm are probably the big ones. For Thursday, we have Amazon and Apple, as well as Intel and MasterCard. And then finally on Friday, we have AbbVie, ExxonMobil. So that's basically a lot of the earnings that's going on this week. It is pretty packed because we have to remember Apple, Amazon, Alphabet, and Microsoft, they pretty much make up a huge chunk of a lot of these major ETFs. So we could see some serious fluctuations if any of these come in pretty bad, especially Microsoft and Apple. Those two have some of the heaviest weightings. So let's just go look at some seasonality charts. So I haven't brought these up in a while just because, sometimes they're inaccurate, but we do see this July mid-month rally that goes up until the end of the month. So here we can see in early August, there is a pretty strong dip right here. I mean, it's going to be nothing like this June dip. So here in June, we saw a massive, massive dip. So here in August, we are forecasting a smaller dip just going off of seasonality. And you do have to remember that we were pretty overextended right now. And there's some serious buying. So I do believe that we could see some sort of cool off. And probably either this week or early August is the most likely. And here in August, you can also see that it's generally a choppy month. Keep in mind that there are no interest rate hikes happening in August. So maybe we could see a continued rally. So I wouldn't be too bearish on the markets, but definitely we're going to have to analyze some of the big earnings that are coming up this week and kind of see where the market's going to be from there. Now, let's also take a look at VIX seasonality. Here you can see that in July, seasonality on the VIX definitely dips pretty darn hard, but we can see this does kind of pick up at the end of the month in July, which is definitely in line with earnings, and it does pick up in August. So here you can see mid-August it does drop off, and then sometimes, a lot of the times you do see pretty strong pullbacks or kind of corrections happen in September going into August or going into October. So that's why the VIX seasonality is pretty high around these times. So let's just go straight into the technicals from here. So I haven't covered BTC in a while, but I think it's just worth noting that BTC has basically broke out of this downtrend recently. You can see right here there's that clear breakout, but now we're kind of struggling to stay above this 50-day moving average, and we're kind of wedged in between the 20-day and the 50-day. The 20-day is at, let me move this little thing right here. 20-day is at 21,549. The 50-day is at 22,207. And you guys can see that we did have some resistance right here. And this showed up right around 22,400. We did break above that, but we did fade. And now we're underneath that again. And I do want to note on the weekly time frame, we have this 200-day moving average that we are struggling to stay above. Now here you guys can see that we actually closed underneath that last week. So definitely if we do want to see Bitcoin rally, we're going to have a close above this 200-day weekly moving average, and preferably more than one close. So that's kind of the status of Bitcoin right now. We are kind of struggling to get above this 22,780. And right now we are selling off quite a bit. So we're about like 1,000 away from that. Now moving on, we're going to go to SPY. And we still do have this chart pattern where we did break out of this falling wedge. Now we did sell off a little bit. As you guys can see, we basically reversed this entire candle right here on the 21st. And you guys can just see that was essentially a reversal right there. So we'll see if we continue to fade, and quite possibly maybe we just bounce off of this. We'll see what happens. And I've been pretty bad about this, but I haven't been looking as much on these lower time frames. So definitely do look at these lower time frames, and we could start seeing some more interesting things. Like right here, we can see this gap. So let's just go ahead, draw our lines right there. Now this gap is essentially going to get filled if we see 382. So if we do break underneath this gap, and let's say we break underneath this gap and then we try and retest and we reject, then I think that could be a pretty darn bearish sign if we do get down here. So I'm always wary of gaps here. So we basically did fill this gap right here, as you guys can see. So this has literally been a really annoying gap. It's just existed for a while. As you guys can see, This gap right here, it's existed for a while. It's been a thorn in our sides. And essentially, every time we wanted to be bearish, we had to be very cautious because of this gap fill that could have happened. And as you guys can see, it did happen. I mean, we saw that 400 happen. And now, we basically faded off the top of that gap. So right now we are kind of in this interesting situation where we do have this breakout. We did kind of sell off right on that gap. And maybe we could go down, we could retest the top of this trend line, or we could fall right back into this falling wedge. So like I said, we want to pay attention to these shorter time frames. And ultimately, probably some pain that I do see if, this week ends up being a sell-off week, then I'm definitely looking at this 382 gap to possibly get filled. So let's just go on the 1 year time frame again. Let's throw on the moving averages, see what's happening there. So if we are looking at these moving averages right here, we're looking at 390 as the 50-day. So if we do at any point kind of price action kind of curls, and then we do break below the 50-day, then and then we also do break back within this wedge area, then yeah, I do believe that there is a good chance that we go and we fill that gap at 382. Now, do keep in mind that we do have this 20-day moving average. We also have this 50-day moving average. This is looking like it's curling up, and it could potentially cross over if we do continue to see bullish momentum here. So that's basically what I'm looking at the SPY for. I'm looking if we continue to sell off, if we bounce off of this trend line right here, and if we break below the 50-day moving average as well. So a break underneath the 50-day, a break underneath this trend line, and potentially could happen where we see that gap fill. Now let's take a look at the VIX. If we're looking at the VIX, we did go underneath that 200-day moving average. So I am kind of thinking we're on that path to going to this trend line right here. Now we're not too far away from that. If we're looking at this trend line, I mean, a potential bounce could show up right around 22-ish or like 21.90. So we are very, very close to that. Let's take a look at the Qs. If we're looking at the Qs, we're definitely seeing this 20-day moving average almost going to curl above this 50-day moving average. Now the Qs look crazy bullish. So I'm just looking right here. We have this trend channel that we've just been bouncing back and forth off of. So we'll see if we break underneath this trend channel right here, maybe we could see a pretty significant sell-off. So we'll just look at these lower time frames right here. Let's take out the moving averages. Let's see if there's any gaps. So right away, I see this gap right here. So if we were going to fill this gap, that would essentially be like maybe a little bit over 3% fall. So that would be a pretty significant drop. Let's just kind of see where we end up. So let's go on the 1 month time frame. If we do fill this gap, then yeah, we essentially enter this gap zone right here, the top of this gap zone. So that's essentially what it's going to look like. Now we do have the support trend line right here. So, I mean, if we were to fall all the way to this support trend line, we could fall quite a bit. That's about, let's see, 15, 16, 17, about 17 points from where we are right now. That's pretty significant. I mean, that's a little bit over 5%. So definitely do be cautious right now if we do break underneath this trend channel, which we kind of are right now, but we're ever so slightly on it, basically. Also do be cautious if we do break underneath this double top area, or actually I should say it's a triple top, because we have this right here, that right there, and that right there. So underneath 296.40, I mean, things do start getting a little bit hairy, and we could potentially see that gap fill right there, right around 289.57. IWM, So IWM has had one hell of a rally, and let's just look at that lower time frame as well, see if there's anything there. So as you guys can see, we are also seeing this gap fill right here, so or this gap zone. That takes us all the way down to 172.70 if we do want to fill that. So let's see, that's about like that's like 3% ish. Yeah, that's about 3%. So do watch out. We did break underneath this trend, as you guys can see. So yeah, we broke underneath it, and we did kind of bounce off of this right here. So this is the downtrend that we've been following. We kind of bounced off this downtrend. So do we bounce off and continue higher, or do we break below? If we do break below this line, then yeah, I do see support showing up right around 176.13. And then if we do break underneath this 50-day moving average, then yeah, I do feel like we could see that gap fill right around here. And that's going to be 172.70. So that's what I got for IWM. And let's just take a look at RVX, which is Russell Volatility. So if we're looking at Russell Volatility, we've been stuck in this pennant for a while. So we could continue being stuck in this pennant for a while longer, but eventually we're going to see a pretty strong breakout, either to the downside or to the upside. But if we do continue to fall just a little bit more, I mean, right now we're basically on this 200-day moving average, slightly underneath it. So I do believe that, maybe we could fall to the support line, and that's going to be right around possibly around like 29. So we're pretty darn close to it. And then if we do produce a bounce off that, then a bounce from this bottom to top could be pretty damn significant. I mean, that could literally be like about a 3% move. So or a 10% move, I mean. No, oh boy, math is hard right now. It's pretty late. That would be like a 30% move, you guys. That's pretty significant. So now looking at Microsoft, Microsoft earnings are on, let's see, it was on Tuesday. Yes, Microsoft earnings are on Tuesday. Let me just double check that real quick. Yes, Microsoft and Alphabet on Tuesday. So if we're looking at Microsoft right now, we do have the support line right here. We do have this resistance line right there. We did break above this. But as you guys can see, we have this resistance line right here, which is right around 269. Now let's go on a lower time frame, see if we have any gaps. Let's see. Let's look at the 1 month. Now I'm actually not seeing any gaps on Microsoft. Now there is this interesting thing that is happening where the 20-day and the 50-day are basically seeing this curl over. So you can see that the 20-day is actually above the 50-day right now. So 20-day is at 260.69. 50-day is at 260.26. So if at any point we do fall below both of these, I do think that price action could get a little bit more bearish. And we do end up falling back within this falling wedge right here. And let me just go ahead. Let's look at the weekly expected moves right here. So if we're looking at Microsoft, we're looking at a $13.55 expected move. Now to the downside, we could see 246.81. To the high side, we could see 273.91. Now keep in mind, this is just one standard deviation. So it's expected to be within this about 65% of the time. So 246, that's going to be like all the way down here. So that's right around support. And let's take a look at that again. 274, that's all the way around here. So, they're basically expecting us to be within this area right here to this support all the way down there. So, they're not expecting new lows for Microsoft. Oh, by the way, I did make a video on Microsoft, so do check that out. They gave us full guidance for the next quarter, which is coming up on Tuesday. So I did make a pro forma income statement for you guys to check out. Now, let's take a look at Google right here. So Google is basically just doodling around here, and we do have the support line, which we are smack dab on right here. So things do get kind of interesting here. So either Google, produces a nice bounce from here, or we just have a serious sell-off to this bottom trend line right there. Now let's just take a look at the expected move for Google. Now Google, the low is expected to be 170. High is expected to be 116.02. So if we're just looking at these moving averages as well, we do see this 20-day coming over the 50-day, but it's also starting to curl down a little bit. So we could just curl right back down below the 50-day again. So now let's take a look at support. We do have this triple bottom support area. It does show up right around 105.63. Now there is another thing that I do want to note. If we do see a pretty strong sell-off, we could actually go and fill this gap right here. So this gap has never been filled. It takes us all the way to right around 97.84. So that would be to the downside. Now at that point, I don't know what Google is going to report, but I do think that it will get pretty darn cheap. Let's take a look at Apple. So Apple is very interesting. There's so much going on this chart. So right now, let's see. The 100-day moving average is right at 153.92. And we are actually above that. So we're at 154.09. And we're pretty darn close to the 200-day moving average, which is at 158.31. But also, pay attention. We're going to zoom out. So if we zoom out, we have this support line right here. As you can see, it's acted as support many times. So once, twice, 3 times, 4 times, 5 times, 6 times. And then it acted as resistance 1 time, 2 times. Could potentially act as resistance right here too. As you guys can see, we shortly went over this. We dove right back down underneath it. So if we do get over this line and we sustain price action right here, I think, I just think that Apple starts looking much more bullish, and I would have a much better outlook on the markets if Apple reported really good earnings and we rallied above this line, like significantly above this line, back over the 200-day moving average. That to me would tell me that we could see some nice movement to the upside. Maybe not fresh highs, but we could recover quite a bit of what we lost this year. So I guess to the downside, I would think probably this support line right here in the shorter term. So that would be right around like 150. And even before that, 152.10, which would be this prior top right here. And then if we were to break below this bottom support line, then, I would think that we could fall all the way possibly to this support line right here. And this one kind of almost lines up with the 50-day moving average. So there is quite a bit of support that shows up right around the 50-day. So that 50-day moving average is at 143.22. And you guys can clearly see this 20-day moving average crossed above this 50. So it is a shorter term golden cross. Now let's go ahead. Let's look at the expected move. So expected move for Apple is right around $8. So we're expecting 146.11 to the low side, 162.07 to the high side. So let's see, 162.11 is actually above the 200-day moving average. So that would be, like right around there. And then to the low side, let's see, what was that again? 146.11. So that's actually still above the 50-day moving average. And you know what? Let's go ahead. Let's check for any gaps on Apple as well. So if I'm just looking for gaps, I am not seeing any gaps on Apple. So this does look pretty nice. Just seeing a chart with no gaps, to me that does just look a little bit more bullish when all the gaps did get filled to the downside. Let's take a look at Meta. So Meta is pretty interesting because we did get those earnings from Snap that wasn't good. We produced quite a big gap, as you guys can see. So if we wanted to fill this gap, that would take us all the way back to almost 183. So if Meta does have good earnings, I would feel like we just see a quick gap fill right there. What happens after that, I'm not too sure. It's going to depend a lot on how good those earnings actually are. Now, I did also make a video talking about just some of the metrics that Meta looks at and kind of the current trend. They also gave us some revenue guidance, and it wasn't all that great. For this next quarter coming up, we're essentially looking at revenue guidance being about like -3% to +3% year over year. So it's really not all that great. It's essentially slightly negative to slightly positive year over year growth. So let's take a look at the chart here. So if we're looking at the chart, we've just been in this trend channel right here, and we've kind of just been chopping back and forth, as you guys can see. We also have this resistance line right here, which we kind of broke out of. So if we're just looking at this right here, we're in this falling wedge pattern that we recently broke out of. We try to make a run past the 50-day moving average, but as you guys can see, we're kind of rejected after that poor Snapchat earnings. And now we're kind of wedged in between the 50-day moving average at 177.51 and the 20-day moving average at 167.88. Now, if I am thinking if Meta does fall, I would think we could potentially hit the bottom of this trend channel again. So that would be like right around 142, 143-ish. If I am just zooming out further, we also do have this support line. Let me just get rid of these moving averages. We have this support line that we've bounced off several times. And right now, as you guys can see, we're kind of messing. We're really darn close to that. So we could just be messing back and forth around this trend line. And then maybe one day we actually get back above it. So if we do get back above it and we sustain movement above this line right here, then I do think that would be a bullish development for Meta. Now let's take a look at the expected move. Now Meta expected move is pretty crazy. We're looking at a $20.42 expected move. So that's 148.85 to the downside, 189.69 to the upside. Now I kind of want to chart what the upside looks like just because I'm a little bit more curious on that. So 189.69, what does that look like? It's basically 190. So if we're getting back to 190, then yeah, we would essentially recover most of this fall right here, and we'll be right around here. So I mean, it's not that great. So we would be, oh shoot, yeah, we'll be basically at the top of this channel. So that is kind of worrisome. They're basically expecting something close to the bottom of this channel, something close to the top of this channel. So yeah, I mean that's not looking too great here. So we'll see with Meta earnings. Maybe they might surprise us. They do have a tendency of doing that. Let's take a look at Amazon. If we're looking at Amazon, we do have the shorter term support line right here. Price action does kind of look like it's curling over. We do have this 20-day moving average crossing over this 50-day. We did kind of have this resistance trend line that we broke over, as you guys can see. And we do have this support trend line right here. We also have a pretty strong bottom right here. So that's a quadruple bottom. So 1, 2, 3, 4. So strong support does show itself right around 101.63. So let's take a look at what the expected move is for Amazon. So we're expecting $9 in price action and 113.42 to the low side and 131.42 to the high side. So let's see. 131.42, that would basically put us above the 100-day moving average. And that kind of lines up with this former top right there. So that would be interesting to see. Do we just double top right there and then fade? Or, do we actually rally back? Do we fill this gap? Now let's look at the downside. Downside is 113.42. If we're looking at the downside, that's essentially that's falling back within this range right here. So that would be pretty darn close to that 50-day moving average or that 20-day moving average at 113.94. So even the options market is still expecting us to stay pretty darn close to the 50-day. So right now, Amazon does look pretty darn bullish, but ultimately the technicals don't matter as much when earnings is so close to the so close around the corner. Lastly, we're gonna look at Tesla. So wow, let's just see how overbought this is. Oh yeah, as you guys can see, let's just look at those Bollinger Bands. Man, we are peaking seriously above those Bollinger Bands. If we're looking at the 1 year time frame, let's see, 1 year time frame. The 100-day moving average is right at 827.48, and we actually made it above that. We went all the way to 842.36. So where could we fall? Well, I definitely feel like we could at least retest the 792 area. So this was the former resistance. So my thoughts, maybe we at least fall back to that. Tesla does have to come down to earth. It is kind of overextended, seriously overextended. Now, we did have that breakout, as you guys can see, and it's a pretty damn strong breakout. So if we do have a serious fade, then yeah, I do think we could get back to this triple top area. That could potentially be a stronger fade down to the bottom or the top of this trend line right here. So I'm thinking a stronger sell-off could go all the way down to 758.87 or potentially lower to this trend line right here. That would be like 730-ish. So we'll see with Tesla. But right now, there's no ifs, ands, or buts about it. It is seriously overbought. And that basically concludes this weekend video. I really hope you guys enjoyed it. And good luck, you guys. Have a great one.